hold it for 41 years and you deposit $500 monthly, which comes out to $6,000 a year. Essentially, that's $125 a week that you will have to put into the account. You will have a net worth of $1.5 million within your Roth IRA. So that's just great to see that it's very tangible. Anyone out there can invest in a Roth IRA. They can put away $100 a week, $125 a week, and they can be able to build generational wealth for not only themselves, but their families. And you can truly be able to live life and have financial freedom for yourself. What's going on, everyone? Thank you so much for tuning into another episode of Insightful Principles. If you could smash that like button for me, subscribe to the channel, leave a comment, share with your friends, that would be greatly appreciated. Now, let me go ahead and get the disclaimer out the way. My content is designed for informational and educational purposes only. Please do your own research when making an investment decision. You must understand your risk tolerance, your time horizon, and be comfortable with making a specific financial decision. Let's go ahead and get started. In this episode, I am going to talk about how you can become a tax-free millionaire using a Roth IRA. Yeah, I said it. Becoming a tax-free millionaire using a Roth IRA. And during this video, I'm going to describe how you can do that with only $100 per week. If building generational wealth is important for you, stay tuned throughout this video. I'm going to describe exactly how you can do it with this tax-free account. I'm also going to explain contribution limits with a Roth, as well as the withdrawal and the penalty rules. And I'm also going to detail exactly how you can get started with a brokerage firm with investing in a Roth IRA today. Now, planning for financial freedom, it takes time, it takes patience, and it definitely takes discipline. But if you have the right habits and you build them consistently over time, you certainly can reap a harvest in your retirement. And if you're looking towards wanting to build financial freedom for yourself. Now, I want to explain what a Roth IRA is. A Roth IRA is an individual retirement account that uses after-tax money. After-tax money simply means the contributions you put into the account has already been taxed from your job. Now, to invest in a Roth IRA, you have to have earned income. So you have to be working, you have to continually be making income in order to contribute into this type of account. Also with a Roth IRA, this is how the account is structured. Now, within the Roth IRA, you can invest in index funds, you can invest in stocks. You have a lot of different options of how you can use your Roth IRA. And the contribution limit with a Roth is $6,000 annually. Now, if you're over 50 years old, it's actually $7,000. So they do allow you to contribute $1,000 more if you are over that specific age. And your contributions and your earnings grow tax-free. How great is that? You don't have to pay taxes on qualified withdrawals as long as you meet two requirements. You have to have the account for at least 5 years, and you have to be at least 59 and a half. Now, keep in mind, if you do have to make a withdrawal before 59 and a half, you don't pay a tax or penalty on the contributions that you put into your Roth. Now, this is excluding the earnings. Now, if this is a withdrawal you're making, including the earnings, then you would be taxed and you would incur a 10% penalty. So, for example, if you contribute $100 into your Roth IRA, and let's say the earnings increase by $50 and it goes up to $150, you can withdraw the $100 and you won't have any taxes or any penalties. But if you were to take out $150, there is a tax liability on the $50 of the earnings that you have profited from. So contributions essentially what's going into the Roth, and distributions is what's coming out. Now, under no circumstances would I recommend pulling from a Roth. You know, I've done it before personally, and it was a non-qualified withdrawal, I was taxed. I also had a 10% penalty. And a non-qualified withdrawal is essentially if you don't have the account for 5 years and if you're under 59 and a half. So that just goes to show the incentive of this retirement account is so you can plan for the long term, so you can have those tax deferred investments. So when you do get older in age, you don't have to worry about paying any taxes. So it's not encouraged to pull from it constantly, especially if you're under those two requirements that I mentioned. Now, also with a Roth, you are able to make withdrawals and not incur a 10% penalty if you're pulling it for a disability. Let's say you get hurt and you need to pull some money from your Roth. You don't incur a penalty. You are taxed at your income, your ordinary income tax rate, but you don't have that 10% penalty. And also, if you're using the Roth IRA to purchase a first home, if you're wanting to look at a home and purchase a first time as a home buyer, you don't have any penalties with that. Now, it does have to be at least $10,000, but that is good to see that if you do have to pull from it, you do have those options for those specific reasons without incurring a penalty. Now, one reason why it's smart to invest in a Roth is because of the expectation of yourself being in a higher tax bracket as you become older. Most likely when you're younger, you tend to not have as high as a tax rate. Your income may not be as high. So therefore, as you age and you continue to make more, that really highlights the importance of why you want a tax-free account, especially if you're accumulating over $1 million, at least $1 million. Having those earnings and those contributions tax-free, I mean, that's wonderful. I mean, how better can it get when it comes to that? So you certainly want to make sure that this is a great structure of a retirement account to have if you are expected to be in a higher tax bracket, which I know for myself, I have that same type of mentality. I know that I'm going to be making more money as I become older. So that's why I personally have a Roth IRA for full disclosure. Now, I also wanted to mention that if you are making more than $125,000, you wouldn't be able to contribute into a Roth IRA. Now, there's still opportunities if you are making that much money. You have what's called a backdoor Roth IRA. I'm not going to explain that specifically during this video, but for someone that is making that amount of money, what I would recommend is, you simply going on Google, you will be able to see what that process is to invest in the backdoor Roth IRA. Now, I want to show you the power of compound interest. Now, as you can see here, if you are wanting to contribute at least $5,000 into a Roth IRA, and let's assume that it's a 7% annual average interest rate, and let's say it takes 41 years for you to accumulate $1 million. Now, let's assume you're 18 years old, and if you simply deposit $104 weekly, which comes out to $416 monthly, as you can see here, the projection of your future investment value will be $1.26 million. So that really can show you that if you consistently invest and you are having an average annual return of 7%, you can have the account for 41 years. And just like that, you can have a $1.2 million tax-free retirement account where you can be able to pull from and you can live and do whatever you feel. Now, I do want to also pull another example, and with the previous example I just provided, let's say a person that is 18 years old, by the time they're 59 years old, they'll have $1.2 million. So that's just great. Now, another example, let's say you have a person at the same age and they contribute $6,000, as you can see here, and the same interest rate. This is the average annual interest rate adjusted for inflation, and also that with the expectation that you're going to reinvest it for dividends. If you hold it for 41 years and you deposit $500 monthly, which comes out to $6,000 a year, essentially that's $125 a week that you will have to put into the account. You will have a net worth of $1.5 million within your Roth IRA. So that's just great to see that it's very tangible. Anyone out there can invest in a Roth IRA. They can put away $100 a week, $125 a week, and they can be able to build generational wealth for not only themselves, but their families. And you can truly be able to live life and have financial freedom for yourself. And it's really powerful when you think about the access that you have with this type of retirement account, this individual account, retirement account, of how you can be able to build wealth. Now, if you are older, you still can become a tax-free millionaire with investing in a Roth IRA. It's just that it could potentially take you longer. It's still going to take about that 41 years. If you're contributing, whether it's $5,000 or $6,000, and you could potentially be also older as well. But that's why it's so important to start early. Start investing early, even if you're in your 20s. If you're watching this and you're 18 years old, start early so you can take advantage of compound interest. Compound interest is so monumental. I think it was, I believe there's a quote that says, I forgot who the person was, but they said that compound interest is one of the 12 wonders of the world. And when you really think about it, compound interest, it really works in your favor. And essentially what compound interest is this interest that accumulates on both the principal and also the interest that you have obtained within the previous years. So as you can see here with the $1.5 million investment value of simply just contributing $500 a month, $6,000 annually, which is the maximum contribution. As you can see, the total interest each year, it just becomes a snowball method all the way up until 41 years. It doubles. It becomes higher and higher. And this is the power of compound interest. The earlier you start, the better it becomes, the quicker you're able to build wealth. And even if you are a little bit older, you still can build wealth. You still can be able to allow compound interest to work in your favor. And also, as you can see here, that if you look at the average stock market return over a 10, the 30, and the 50-year period, for 10 years, 2011 to 2020, it was about 11.96%. This is the annualized real return adjusted for inflation. And then, like I mentioned, as you get to more of 30, 50 years, it starts to come down between 7 to 8%. So I definitely think that the strategy is to buy and hold and continue to allow your wealth to work for you and to build over time. And, you definitely can do it. Anyone out there can be able to invest in a Roth IRA and become a tax-free millionaire. And as far as going about opening up a Roth IRA, you have many options. There's a lot of brokerage firms where you can simply open up a Roth. You have Fidelity, you have TD Ameritrade, Charles Schwab, just to name a few. And essentially, what I like to do is picking an index fund, because as I've discussed before on this channel, an index fund is essentially a fund that mirrors a specific index, and it's a portfolio of stocks, or it may mirror a specific sector. So you get more exposure when investing in an index fund. It gives you more diversity. Now, you certainly can invest in stocks. I invest in stocks within my Roth IRA. I also have a few index funds as well. So you definitely do have the flexibility of doing both. And for me personally, with the index funds that I have VTI, which is the Vanguard Total Index, and they pretty much mirror a specific index within the Vanguard list of funds. And within their portfolio, within the amount of stocks that I'm investing in, I'm getting about exposure to over 4,000 stocks within the index fund, and I have everything from Apple, Microsoft, Amazon, Facebook, Google, Tesla, Nvidia. So that is a very great one. And the other one that I have is XLC, which XLC is a spider fund for the communication services sector. So pretty much this index fund is mirroring a communications index, the select sector index, and I have a lot of the top communication companies and I'm invested in within this specific index. So it does have some as the other index. It has Facebook, it has Google, Netflix, Verizon, T-Mobile, AT&T, Charter Communications, just to name a few. So that's how you can be able to become a tax-free millionaire, investing in a Roth IRA, and how you can be able to go about opening up a brokerage firm and getting started today. And I wanted to be able to highlight just how tangible it is. With only $100 a week, you can simply be able to build at least $1.2 million. I mean, that's so great. I definitely think that you should get started with it now and don't hesitate. Start building wealth at an early age and allow the fruits of your labor to build over time. As always, smash that like button. Continue to subscribe to the channel. Continue to share this video if it stood out to you. Please comment any suggestions that you can give to me. I would love to hear if you are investing in a Roth IRA. Comment below on some index funds or even some stocks that you have ran across that have been very successful for you. I would love to hear your experiences with investing in a Roth IRA. And I want to tell you all, continue to support the Patreon channel where I create exclusive content in finance, business, and investing. I have my platform where you can be able to connect with me on a personal level and learn more about how you can be able to build wealth and learn more about financial literacy. I'll put all of that information in my show notes. Definitely follow me on Instagram at Insightful Principles. Also follow the TikTok as Insightful Principles as well on that platform. And I'll put my link tree in the show notes. And I want to tell you all, thank you so much for tuning into another episode, and take care.